Well, in this day and age, as long as you've got some level of equity, like even 20%, and you've been in business and you're performing well in business, there's some really interesting stuff you can do through business banking. So it might be a situation like traditional lenders need 2 years of income. But if you've got good equity, you can nowadays go off 3 months, 6 months of BAS and still get your business facility funded, and they'll take that income and annualize it and then utilize it for a home loan as well. So it's not the end of the road if your income doesn't stack up in the traditional sense. Of course, if it does stack up, you've got far wider options, which is really important as well. But it's you're probably going to have that risk reward as well. So because there's bigger risk that they're going off the bass, it used to be a lot worse. Like it might be 3-4% higher, but nowadays the difference is probably only about 0.3%. So it still enables you to get into the market, but you need good equity, you need a good deposit. You're not going to get anything if you have to borrow up to 95% and you've only got a small deposit. But if you've got equity and you've got good cash flows coming through the account and your accountants are doing the BAS, then or even we can track through the transactions accounts for the last 6 months and annualize, we can sort of reverse engineer that income back into the mortgage as long as we're borrowing that 80% mark overall. So that's another option that a lot of small business owners don't know that's available, and it's a good one to explore and investigate.
Marty, I've got a quick question on that. So, a traditional lender that would usually take the 2 years, if someone's had a downturn during COVID, are they are they at the stage now, as in the lenders, where they'd say, okay, well, we can see what's happened during COVID, and we can see you had 6 months, 30, 40% down, but we can see the next 6 months have ticked up. Is that something that is happening now, or do you still have to go down the business banking path?
No, look, in regards to just a more traditional lend, if there's been an impact of COVID and that's shown up in the results, as long as you've got 6 months of income statements and BAS in this latest year, and we can show that it was the income is equivalent to the pre-pandemic levels, we can find ways to get the deal done. They're looking at that because they know, like, there's all sorts of things going on, JobKeeper and all these government subsidies, and probably a downturn for a lot of clients. But if you're back on track and you're seeing those cash flows come through the account and the equivalent of pre pandemic levels, then the bank will honor that. Not every bank, but there are certainly lenders out there that'll honor that and get the deal approved. So, yeah, it's a great question, Nick.